So we get lured into short-term trading. Let me get an answer from neuroeconomics this time. In our brain, there is a chemical that gets generated called dopamine. This is supposed to be a pleasure chemical. Dopamine responds to whenever we get something that we really urge for or crave for. So for example, when you're hungry and you get good food, dopamine is generated. For some people, a dark chocolate or alcohol and profitable investments. So dopamine is affected by the anticipation of making money also. In a way, this trading or short-term trading is akin to having an illegal pleasure drug where your brain feels the same thing. There are two important characteristics of dopamine. One, dopamine, as it is generated with anticipation of money-making opportunity, it actually nudges you to trade and or nudges you to act. And two, if the pleasure is not increased, dopamine is not generated. If you see for investors, it has a lot of implications. First, if you keep watching the ticker or some financial news and you feel you have the opportunity to make money, you think that you have the opportunity, dopamine induces you to trade more. And second, dopamine responds to increasing levels of pleasure. People tend to increase their stakes or trade more in hot stocks to get more pleasure. So in a way, neuroeconomics is saying our brains are tuned to short-term trading, which means it takes a lot of discipline to control those emotions and think about long-term investing.
Mutual fund investments are subject to market risk. Read all scheme-related documents carefully.